Now, after last Friday, which saw three big banking stocks come to the market with their earnings, JPMorgan Chase, Wells Fargo, and Citigroup, all beating on the top line earnings and revenue estimates. We've got some other companies coming through this week. But before I get into the numbers that were expected, I just want to quickly revisit what happened with a couple of these stocks. This is JPMorgan Chase on Friday. That stock was up considerably. As of the high point on Friday, we saw it rise all the way to $154.43, the highest we'd seen it at since the 17th of February. Then came a really big pullback, and the stock was actually down on the extended trade, down 1/10 of 1% at the close because of concerns about the outlook. The outlook was detailed quite nicely by Citigroup. Citigroup did actually pierce through this falling line of resistance at one point, but then came the drop down over 4% as at the close. Concerns about rising costs, concerns about the fact that it's just not trading anymore. We've seen volatility drop, which is really hitting all these trading houses. And also M&A is down heavily. Now, tomorrow, we get the Bank of America earnings expectations, 84 cents on revenues of $20.02 billion. And on Wednesday, Goldman Sachs expected to post earnings of $3.46 per share on revenues of $10.66 billion. I want to show you the Goldman Sachs chart because this is going to be one of the ones I think that could well be worth watching. Goldman Sachs is an all-session stock on the IG platform. And we've seen it gain recently, but it's well off the highs from a few months ago. According to Semaphore, citing people familiar, these earnings from Goldman will be its worst quarterly earnings in years, with write-downs on Goldman's Green Sky consumer lending business and on holdings of commercial real estate, and likely to exceed $2 billion, according to Semaphore, sending the return on equity into the low single digits. So Goldman Sachs could be one of the ones to watch, potentially on the downside, if that does continue to concern investors.